Welcome to part 3 in our Fibonacci and Trading video series. In this section, I'll show you how to use the Fibonacci Extensions Tool inside of Thinkorswim. Now, if you've been following along, in part 1, we understood what the Fibonacci sequence is and how it connects to trading through the Fibonacci ratios. Then in part 2, we connected those Fibonacci ratios to the Fibonacci Retracements tool, which is the first Fibonacci tool we have in our trading toolkit. Now in this section, we seek to add one more tool to that toolkit, and that's going to be the Fibonacci Extensions Tool, the icon to the right of the Retracements tool, the one that has a percentage sign and a vertical line going through it. Now by the end of this video, my goal is for you to have a good understanding of what Fibonacci extensions are, when to use this tool versus the Retracements tool we talked about in the previous section, how to use the Fibonacci Extensions Tool, what settings to have so you can get the most out of this tool, and then finally practicing it on 4 different charts for 4 different examples, so some real life scenarios. Now let's get started with first understanding what Fibonacci extensions are before we start using it on our charts. Now similar to the Retracements tool, which gave us a roadmap, we had the R and the R there, with the Fibonacci Extensions tool, that allows us to extrapolate price action. And when we say extrapolate, that means we can compare previous swings to the current swing. And the beauty of this is we can do so for both support and resistance levels. So both sides of a swing you can essentially project. Now I think this will click if we take a look at a real example. So let me pull up a chart of IWM, and this is the same chart we were looking at in the Retracements tool section. Before we ran the retracements using this swing high and this swing low. Now let's run the extensions in the same swing. And since we're looking at a bullish uptrend here, let's start by running the support extensions first. Now after our first swing, which is this swing high to swing low, that's our first data point. We can use that to try and extrapolate a place where we expect support to come in. And that's if these two moves were 100% identical, then that would give us a support level of 121.85. Now here we can see that this swing, while similar, was off by just a little bit. Price went a little bit below our support zone that we had extrapolated. But this gives us swing number 2, so now we have an additional data point. Now for the next swing, using this swing high right here, we have 2 different swings that we can extrapolate, but let's start by first extrapolating our most recent swing, which is going to be this swing right here. So what happens if we extrapolate that? We can see if we run this swing high to this swing low and extrapolate that from this swing high, the 100% extension of that is 133.73. And price went just a few pennies below it before really finding some serious support and then making its next move up higher. So what we're seeing here is these 2 swings so far, swings 2 and swings 3 in this trend, have been very similar. Now, what happens if we show all the different support projections that we have for this uptrend? This is what that chart would look like. A lot of lines on your chart, but let me walk you through it. It's fairly simple. For our first swing right here, we don't have any downside projections since this is our first swing. We don't have any data points leading up to this for this trend. Now for our next move, using this swing high, we have our first swing as our first data point. So we extrapolate that from this swing high, which gives us a downside level of support at 121.85. That's our projection. Now we overshoot it by just a little bit, but then we make our next move up. After that, using this swing high, we have 2 swings that we can use to project to the downside. We have this swing and we have this swing right here. So if we extrapolate both of those, we get our 2 different levels right here. One is a little bit deeper, which is the second swing down to 133.73. And the earlier swing, the smaller one, this swing right here, is this second red line right down here. So that's our third swing in which we can project using our 2 previous swings. Now for our next swing high right here, we have 3 swings leading up to this point. So 3 different data points. We have this swing, we have this swing, and we have this swing. Projecting all 3 of those swings, we have 1, 2, and 3, the 3 different red lines that we see going horizontally right here. That first zone is 144.82, and that was based off of the very first swing, which is the smallest one in this trend so far, which ended up being the one that held. I'll show you some tricks that I like to use to try and find which one of the Fibonacci levels are likely to hold, but that's for the next section. I'll share some triggers that I like to use to confirm which level is likely to hold when we look at examples, along with in part 4 when we discuss Fibonacci clusters. Now, so far in this trend, we've projected just the support levels. What about the resistance levels? That's the upside extensions if we have similar moves happen as what's currently happened before. So if we project the upside extensions, this is what that looks like. I've tried to make this a little easier on the eyes by projecting the upside extensions in a yellow horizontal level. And if we take this first swing, so that's swing low to swing high, and we project that from this swing low, that gives us a 100% level of 124.51, and that's the level that we use to project this to the upside. Conveniently enough, that's where price more or less stopped before we had some resistance, some more chop before finally breaking above it. Now, our next swing in this same trend is from this swing low to this swing high. What happens if we project that from this swing low? That gives us a 100% level of 151.45, I think it was. And we see that's basically where price ends up going to, stopping, and then reversing before hitting our downside support extension levels. So hopefully this is starting to click how both the upside and downside extension levels can help paint the picture in terms of replicating what has happened previously in the same trend. Now, if you overlap this with key retracement levels, you start to get the beginnings of a Fibonacci cluster. That's where we're looking for any places where we have an overlap. One example of that, if I show you on the chart, is this level right here. That's an overlap of the upside extension level from this swing low to this swing high. We extrapolate that to the upside, which also overlaps nicely with that 382 ratio. So this is an example of a cluster. Similarly, there's a few other clusters on this chart. If you'd like to test yourself, pause the video here and see if you can find some other similar clusters. Now, if you're ready to see the results, go ahead and hit play. There's 4 clusters that I found on this chart, and they don't need to be perfect. We're just looking for levels where they more or less overlap, giving us a nice little zone. So the first cluster I talked about was this upside zone, which was resistance. That same zone, the 382 Fibonacci retracement, overlapped also on that downside move with that Fibonacci extension at 121.85. So this was cluster zone number 1. Now cluster zone number 2 came in right here when price made a move to the upside, where we already extrapolated the upside projection, that's this swing low to this swing high, extrapolated from this swing low, which also overlapped nicely with that 786 retracement zone, before we then saw price action reverse. So that was cluster zone number 2, and reversed into cluster zone number 3, which is a nice overlap with that 50% extension, along with that downside support off of that 100% extension from our previous swing in this same move. Now after that, our fourth and final cluster that we have on this chart is derived from comparing that very first swing right here that we had, this swing low to swing high, and projecting that to the downside, and using that alongside the 618 as our next zone that we're looking at for our move or next leg up higher. So hopefully this is now starting to click how Fibonacci retracements along with Fibonacci extensions can work together. More on that in the next section in which we build clusters, but for now, let's move on to charts and take a look at some examples. I'll start by first showing you how to configure the tool on your end, and then I'll walk through 4 different examples. Coming into our Thinkorswim charts, let's start by first selecting the Fibonacci Extensions Drawing Tool. Select Drawings, go to Drawing Tools, and here select Fibonacci Extensions, which is the icon to the right of the Retracements tool. Once you click it, select any 3 points on your chart. For your first time, it doesn't really matter. We're just trying to get these lines on your chart. There, right-click these lines, select Edit Properties, and let's start to configure some of these settings. Here, select all of these ratios and turn them off outside of that 1.0 ratio. Once we have just that 1.0 selected, then click Save as Default, and then click OK. Now we can select this drawing right here, right click and remove it, so we have the Extensions tool only plotting that 1.0 ratio. Now let's zoom into the chart of ES, and this is going to be our first example, and this is from today's activity. This is a 5-minute chart of the S&P 500 futures. That's from today's trading, which is April 13th, 2022. Now if we use our Fibonacci Extensions tool here, let's start by trying to draw some extensions and find support areas in this trend. Now this swing right here has very clearly been the largest swing today. We can see that by measuring it swing high to swing low, and if we extrapolate that from any one of these swings, it's really not been hit along the way today. We've just continued making higher highs. So this swing has been a fairly large swing. If anything, we could use that to extrapolate from our most recent swing high as of right now. If we make a new swing high, we can adjust that to continuously keep projecting downside support levels. Now along the way for today's activity, we had some other smaller swings. Here's one for example. We have this swing high to this swing low. If we take that and we extrapolate that using this swing high, so imagine being at that current moment, so each time you make a new swing high, we're adjusting that extension up, up, up. We finally make a swing high, we stop making new highs, and start making slightly lower highs here. The extensions tool gives us a downside projection where if this swing is likely to be similar to this swing right here, that downside level is 4417.75. Funny enough, price finds support right near that. We can see the wicks one more time before then making a move to the upside. Now the question is, to the upside, what does this projection look like? So if we take that same projection, now we're using our swing low to swing high, and this time extrapolating that to the upside, it's sort of funny how that worked out right here. This move, this morning move, swing low, swing, and then the move that came after that was the exact same as the move that came right here, and then the upside move after that, before we then saw some selling activity. Now the question is, what about this swing? Was that swing similar to any one of these swings along the way? Let's try and compare that. So if you use this swing, we compare that to this swing. We haven't touched that, but fairly close to it. If we project our first swing as well, and we use that from our current swing high, we see that now gives us a zone, and that level has been breached before price action started to make its way away from those levels. Now the question in this chart, for example, the 5-minute chart comes in, how do you know which Fibonacci level you're waiting for and which one you're going to use for trading? The way I like to confirm these triggers is usually when you're using Fibonacci extensions for support, price is going for at least a short term in a counter trend direction. So in this case, the overall trend is bullish and price is making a currently short term counter trend move into Fibonacci support zones. So in such a scenario, the way we confirm these moves is by using overbought, oversold indicators. The one I like to use is the edge signals indicator, but if you don't have access to that, you can also use something like the RSI, which is built inside of Thinkorswim. But for all Volatility Box members, the edge signals indicator is a free indicator included with your membership, and we use that as our bread and butter for overbought, oversold confirmations. Now using the edge signals indicator here, if we load that into our charts, we're seeing when that green arrow comes in, that's when the move is actually confirmed. Now a way to try and dial this down, get a little bit more aggressive, slightly earlier entries would be to come into a smaller time frame chart. So say you're on a 5-minute time frame chart drawing these extensions, you might come into something like say a 1-minute or a 3-minute chart and use that chart trying to find the edge signal confirmation on a smaller time frame. Now, getting into a smaller time frame here allows you to narrow down, try and pinpoint your entries to try and find places to enter where you have slightly better entry points closer to your Fibonacci levels. Now next up, let's take a look at XLV here, and this is going to be off of the daily time frame chart. We'll compare similar swings in this overall uptrend to try and see if there's any similarities here. Inside of this, the swing that I see is this swing high to this swing low. And if we project that from this swing high, we can see we're finding this pattern of that 2 wicks similar to the one we just saw in the S&P, although that was on a 5-minute chart. So far this level is acting as support, 138.26. Now from that level, let's try and see if we first have any other similarities here. So we have this swing high to this swing low, projected from this swing high. We've already broken past that level, so I'll hit the escape key to try and get out of that extension without it printing. Now, after that, the only other swing we have is this swing, and it's clearly much smaller than what we see right here. So this was the only swing. Now let's try and project this to the upside from where price is currently at. So for that, if we take this swing low, we take this swing high, and we project that from this swing low right here, we get an upside potential target move of 148.10 if we're likely to see a move similar to the one we saw earlier when we had a similar downside decline. Now let's try and see just real quick to give you a teaser of what part 4 is going to be about if we have any clusters forming. So for that, I'll take our Retracements tool. I've changed the drawing tools to Fibonacci Retracements. And then I'll take this swing high to this swing low, draw that out. So first off, for our support zone right here, that's overlapping pretty nicely with our 786 level, so a nice little cluster there inside of XLV. And for our upside level, we're getting this zone for upside targets near 146.85 off of that 1272 up till about 148.10 using our upside extension, projecting resistance using this swing's upside move, projecting that from our current swing low. Now if we do make a new swing low from this, we'll need to adjust that upside extension projection, and our downside extensions might be broken. Now the question of what is our confirmation trigger for this particular chart? Well, for XLV, we can come into something like either a 1 hour or a 4 hour chart, since we're using our extensions on a daily time frame. I'll load back in the edge signals indicator here. On a 1 hour chart, we have not yet seen that green arrow, but that's what we're looking for. And to give you an idea of how that looked like the last time this printed, off of the support we're looking at, the edge signal printed right here on a 1 hour chart. We had the edge signal, we had a nice move upward for a short bit of time. We then had a small pullback before we had then the ultimate move as part of this larger swing up. So similarly, if we see something similar here, we're looking for that green arrow. Once we see that green arrow, that's really our cue to try and enter, looking to play a move away from really this pivot point into the overall upward direction of 146.85. Now, if you wanted to be even more aggressive than say the 1 hour time frame chart, you might come into something like say the 30-minute time frame chart, where that arrow has already printed and we have a move away from our Fibonacci extension, at least as of right now. So this is how you can get closer and closer in terms of shrinking your time frame to change whatever your focus may be. If you're a swing trader, if you're a day trader, what you're going for in terms of your target, and use the Fibonacci extensions alongside your overbought, oversold confirmation to try and trade these extension levels. Now let's move on to the next example, which is going to be inside of Costco, and this time it's going to be off of our daily time frame. Now let's start one more time by drawing these extensions from scratch. Now the most obvious swing that I see that we have is this swing high to this swing low, and if we project that from our current swing high, that gives us some downside support areas near 561.01. That's a bit of a ways away from where price is currently at. Do we have something maybe a little bit closer? So for that, let's try and run some more swings. So another swing that we have, which is really a baby swing, but still a swing between swing highs and swing lows, is this one right here. If we project that from where price action's currently at, that was somewhat similar. If we also project this earlier smaller swing, that too was similar to where the swings currently stopped at inside of Costco. We did break a little bit below it. Now if we come into something like say a 1 hour time frame chart, let's see if we've seen any one of our trigger signals. We use the edge signals indicator here. 1 hour time frame chart in Costco has triggered off of that 1 hour move. So while we did break a little bit below it, this now gives you the place where the stop is outside of, and we're looking for a move away with that 1 hour signal confirming that shorter term move. And for the shorter term move, you might even shrink to something like that 1 hour chart and use a 1 hour retracement to try and find some shorter term targets as well. We'll go through more examples of that when we go through clusters in the next section, but for right now, this is the example inside of Costco. So there we have these downside levels near that 585 and 582 mark, where we do have that 1 hour so far that has confirmed this move, looking for at least a retest of that 1-272 retracement ratio that you might have. So that's another way to use the extensions on Costco. Now the fourth example is going to be inside of Edwards Life Sciences, ticker symbol EW. And there I already have the extensions drawn out. I thought it would be a little bit more fruitful to talk this one through. So here, for example, I have 4 swings leading up to our current swing high that I could recognize. I've extrapolated all 4 swings from this swing high. So this swing right here, this swing right here, this smaller swing right here, along with this smaller swing right here as well. The 2 smaller swings give us this first cluster zone right here near that 118 mark. And then the two larger swings give us this zone right down here near that 113.56 down to 112.68 mark. Now, if we zoom into something like, say, a 1 hour time frame chart, what we're looking for is for, say, these zones to get breached, and then we'd like to see the same edge signal arrow on at least that 1 hour time frame chart. If you'd like to be a bit more aggressive, you can come into something like, say, even a 30-minute chart trying to play these same zones. If you're a day trader, you might narrow down your focus to something even smaller, like, say, a 5-minute chart, looking for the place when these zones are actually breached, and using something like, say, a 5-minute edge signal to try and play a very quick move away from those levels. So depending on the type of trading style that you like to follow, you can tweak what time frame you like to use based off of whatever the levels you're trading, and use that to work within your confines. Now in the next section, part 4, I'll show you how to combine the Fibonacci Retracements tool with the Fibonacci Extensions tool that we broke down in this section to really start to get a good groove going on with your Fibonacci tools. I'll show you the process I like to follow. It typically starts with running retracements for the larger swings that we have, and then running extensions along the way to try and find the next likely place we have for both support along with resistance. Stay tuned for part 4, and if you haven't already, make sure to watch parts 1 and parts 2 of this series, and maybe even rewatch parts 3 if you need a refresher on any one of the Fibonacci tools. Take care everyone, and I'll see you in the next section.